Good morning, and thank you for joining us for the JMM Nuclear Energy Forum. I'm Jane Morgan from Jane Morgan Management, and today you'll be hearing from the Portfolio Manager for the Tribeca Nuclear Energy Opportunities Strategy, Guy Keller, Managing Director and CEO of Elevate Uranium, Murray Hill, Managing Director of Basin Energy, Pete Moorhouse, and the CEO of Cauldron Energy, Jonathan Fisher. If you'd like to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. But first up, we're going to kick things off with a sector overview from Tribeca Investment Partners, Guy Keller. So Guy is the Portfolio Manager for the Tribeca Nuclear Energy Opportunities Strategy, which invests in the equity and debt of companies involved in the nuclear energy industry, with a key focus on the uranium sector. Good morning, Guy.
Hi, Jane. Thanks for having me, and hello everybody that has dialed in today, and we'll be watching this later. So yes, as Jane said, I run the Nuclear Energy Opportunities Fund. We launched in 2018 after a deep dive into the sector, and we launched in 2018. There's been some pretty good returns since those. I think we've done just over 400% net of fees since inception. And most of that was through 2020 and 2021. I think we are certainly at the beginning of the next cycle. The great thing about uranium is that it does run in multi-year cycles, and that's largely because utilities, unlike any other commodity, generally or still do engage in multi-year contracts, of which they've been absent for a decade. When you look at just the thematics, I mean, from our global natural resources perspective, we look at obviously the thematic of decarbonisation, and we take that a little bit further for nuclear and say it's decarbonisation via electrification. Now, obviously, it's no good. I mean, it's fantastic having a battery electric vehicle, but if you're plugging it into coal-fired power, you're not actually solving a decarbonisation problem. When this is actually a global natural resources slide, not just tailored for a uranium crowd, and we're looking at the commodities required for decarbonisation, and uranium is obviously up there on the electrification angle. The more relevant driver for nuclear, however, whilst decarbonisation has been a driver, the more relevant driver has been energy security. And more importantly, government changes to policy that have brought forward commercial decisions. And most of that is the nuclear nations. There's 32 odd nations currently producing nuclear electricity. Almost all of those have now made decisions to keep their nuclear fleets running, to extend the operational lives of those nuclear reactors, to build new gigawatt scale technologies, and also to invest in the new technology around small modular reactors and micro reactors, as to how to bring those to their grids. And that, when you look at the demand equation, nuclear uranium is actually one of the easiest commodities to model demand, because most of the existing demand is already built. And as I just alluded to, that existing demand, which was starting to naturally decay in the last over the last decade, has now snapped back as those government interventions have caused those reactors to extend their lives. So you can model it out, 10, 15 years fairly easily. And we're also in the middle of the biggest reactor build program we've seen in decades. So there's 61 odd reactors, which, just as an aside, that 61 odd reactors are coming on in the next 5 to 6 years. That they will require 30 odd million pounds of uranium. Put that in perspective, that's more than NextGen's Arrow deposit and what they're going to be doing when they come into production later in the decade. So we're starting this thesis after a decade of chronic underinvestment and low prices that have forced supply out of the market. We're starting this thesis with a deficit that has lasted a decade. And we're adding to it new demand that will be there every year for 60 years. So it's very different to something like lithium, where global economic cycles might cause some uncertainty as to whether battery electric vehicle uptake will continue. It then causes uncertainty as to whether future demand around gigafactories, whether they're going to be built. We're already seeing some of those headlines. So again, your demand is flaky. It's governments pushing nuclear to stay around in a market that we're suddenly expecting supply to magically appear. Now, this is a really wonderful slide, and I want to focus a little bit on this. This is the World Nuclear Association, so it's not a bank analyst, putting a model out. The World Nuclear Association, they have a number of subcommittees across both supply and demand, where they're talking to almost every country that's involved in nuclear, or they are talking to every country that's involved in nuclear, as well as some that want to be, and they're looking at potential supply. You can see here that just to meet the lower scenario, so they put out 3 scenarios. The reference scenario is the most likely, and then they give you a band on lower and upper. You can see here that the way the World Nuclear Association looks at the world, they're only seeing enough supply response to meet the lower demand scenario. The gap between those colourful bars at the bottom and the reference line, they're calling unspecified supply. So, anybody that's spent any time around the mining sector, regardless of commodities, it doesn't have to be uranium, knows that it's hard enough keeping existing mines running in the current environment. It's hard restarting idle capacity, and we've already seen some news around delays of idle capacity coming to market, which the market assumed was coming. It's really, really hard to develop a mine that's already in development or starting development. And the planned and prospective, a lot of things need to go right for those projects to come to market. And then, assuming we can achieve all of that, we still have to bring the unspecified supply into the market to make that reference scenario. Now, you're going to hear from 3 companies here today who form part of that unspecified supply. So, they're not yet considered by the WNA. So, these guys have got to bring their projects to market as well to bring us anywhere near what we need to achieve. So there's a lot to do. And as I said, a lot that needs to go right because reactors are going to continue to get built. And it's now up to the mining sector to find that ability to respond. We're in a and again, this just sort of brings it back to the reality here. Price, as well as good as that is, and here we are up around $70. And when I started looking at this thesis sort of 6 or 7 years ago, we're trading at $18. There was a school of thought that we'd hit $60 or $70 and there'd be a wall of supply coming to meet that demand, and it hasn't happened because price is not the only thing that we need to solve here. We bring it back, and we've only got a short period of time, so I'm going to skip through a whole bunch of these things. But you come back to the investment, to the checklist that all of these projects have to do. Price is wonderful because it gets you looking like you're going to give a return to investors. But as I said, there's a whole bunch of other things: jurisdiction, community, indigenous relations, finding the money. Do you have the right management team? So whilst we are certainly going to be ticking a lot of those boxes with a lot of these projects looking to come to market, it's not going to magically solve itself overnight. And as to have we done enough at $70, cost inflation across the sector of all commodities and all projects and would argue that $70 is probably not high enough. I tend to throw in $85 now as to a price where I think you'll start to see more projects think about final investment decisions, but remembering they need to tick all these boxes. Now, I think I'm pretty much up to the 10 minutes already, and you're not here to hear me; you're here to hear from these other 3 companies. So I'll stop there and allow us to keep moving forward, if that's okay.
Yeah, not a problem. Thank you for that, Guy. I mean, I think I might actually open this up to a panel discussion now. So let me just bring, if everyone can join us back on the panel discussion. So gentlemen, and Pete, I think I might hand over to you first up for this one. So we've seen a lot of changes in the sentiment towards the uranium sector and nuclear energy over the past year. Do you want to just elaborate on what you think has driven this?
Yeah, absolutely, Jane. And just before we get off, thanks again, Jane, for setting this up. It's great to be talking today. Most of the points to answer that question, I'm going to reiterate Guy's comments there, but to me, fundamentally, the change in sentiment towards nuclear is being driven by these global targets set for carbon emission reductions. Now, this is obviously a response to managing climate change. So we have to remember globally still, we're burning fossil fuels. Around 80% of our world energy demands is coming from burning fossil fuels. And this is a phenomenal number. We've seen some fantastic advances in renewables and energy storage technologies, but these don't come without some significant challenges. Now, whether that's technical, whether that's geographical, or the significant amounts of investment which are needed to support the implementation of those. So whilst the world tries to meet these emissions targets and integrates renewables, it's fundamental to policymakers that countries can continue to provide safe, reliable baseload power. I guess, look, if you're a policymaker, and this really comes back to Guy's comments about energy security, the last thing you can afford is for your constituents to hit the light switch and be subject to rolling blackouts or brownouts. You know, that it doesn't put you in a good light, pardon the pun. And look, that's why we're seeing numerous governments around the world really focusing on nuclear as being a fundamental element or component to their energy mix. And we're seeing that in policy changes, whether that be the well-advertised US supports for supporting the nuclear industry, or perhaps the more subtle things coming out of Europe. Sweden this year in June, for example, changed their wording of their energy policy. They were 100% renewable energy by 2045. This got changed to 100% fossil-free by 2045. And this is examples of setting their policies to accommodate and to integrate nuclear as a stable part of their power supply. Look, with regards to sentiment, I guess the additional mainstream media coverage that we're seeing, the coverage on nuclear technologies, the advances with SMRs, the advocacy of people like Bill Gates talking about nuclear and the viability and the place that it has moving forward is again building on that sentiment. And with that additional focus on nuclear, we see a look at where are these supplies coming from. Guy's been talking about the deficits for several years now. This is very real, and people are now starting to look at that, and you add on the other geopolitical instabilities, and it's an even more compelling narrative. So look, from my side, we've had a seriously unincentivized uranium exploration business for many years now. There's not been a lot of activities done for a long time. There's been minimal new discoveries. Yeah, sure, there's a reasonable amount of multiple projects around. A lot of those were last looked at 10 or 15 years ago. So people are thinking, well, look at CapEx, look at OpEx increases in that time frame. And quite clearly, we need a significant price shift in uranium, and we need some new discoveries. So the renewed sentiment for exploration is there, and it's very real for good deposits in good jurisdictions. Does that answer?
Yeah. Guy, I'm going to actually just hand back to you for this one. So, I mean, can you walk us through what you're thinking about valuation in this particular space? And also, how do you see uranium playing a position in the portfolio of investment companies at the moment?
The one thing about valuation is that every analyst is going to be wrong, and every analyst is going to be behind and chasing their tail, because that's exactly what happened last cycle. And this sector, when the price moves, it moves extraordinarily quickly, and nobody's ever brave enough to look back at the last cycle and say, why can't I throw a $100 uranium price into my models, or a $140 uranium price? Where does it stop? So I hear, and the other thing as well is most of the sector's not producing. So it's, you can't sort of look back on your normal multiples that analysts like to feel comfort in. So they want to look at price to NAV or EV to resource. I actually personally hate EV to resource, because it means a company can go and stack a whole bunch of projects that are never going to get developed and say, look at me, I'm trading cheap on an EV to resource basis. Compared to somebody else who's almost producing. So yeah, as I said, if a brave analyst goes and throws an $85, $90 or $100 price in, then valuation's not expensive on some of these names. Also, there's a scarcity, right? It's not like, there's 1,000, it's not like 1,000 lithium wannabes coming to the market. There's just not that much out there at the moment that can move forward in this sector. So, that scarcity premium sits. How it sits in the portfolios, I mean, the interesting thing here in the ASX is you've now got 4 companies in the small ordinaries index. That's almost 2.5% of that index. And so there's a lot of small cap eyeballs that now are forced to look at that because, June last year there was 0. So it's not like lithium where a company comes in of the small ords and be replaced by another one. So there's company specific. This is a whole sector that's just appeared. And to put that in perspective, just to get index weight, $100 million small cap mandate needs to hold a couple of $1 million worth of stock. You multiply that to $1 billion small cap fund, they need to hold $20 million of those 4 companies just to be index weight. And if they then choose to take an overweight position, then they're adding more. So you're seeing a lot more of that buying come in now from those small cap and small ord sort of index guys that you didn't see before. Before it was just ETFs, for example. So, it's reaching a broader audience. And of course, the next question people ask when they've done the work on those 4 companies is they say, what's not in the index that may get in? Or what else is there that I might go and throw into my PA portfolio because I'm looking at the space suddenly. So, as a result of that, you do get a lot more interest. And certainly I'm seeing much more inbound from both investors into my fund as well as peers in the sector who say, what do I need to look at here and how do I get involved?
Perfect. John, I'm going to actually hand this one to you. So considering the projected growth in nuclear capacity, which was outlined in the World Nuclear Association's Fuel Report, how can international collaboration be fostered to ensure a harmonized approach towards nuclear safety, security, especially in the midst of all the geopolitical tensions?
Yeah, and Russia, Ukraine is, a really important factor here. You'll notice that there's been massive sanctions on all sorts of Russian things, but one thing that hasn't been sanctioned is uranium yet, because the West just cannot live without that uranium supply for now. But they want to, and it's to be expected that the Western nuclear leaders, being the EU and the US, look to like-minded supply countries like Australia to bulletproof their security of supply, their nuclear value chain. That's with uranium. You've obviously still got an issue with conversion and enrichment because, again, there's a lot of that capacity sits in the east. But over the next cycles, I do expect that you'll see a concerted effort to sort of westernize a lot of that value chain. In a way that the US has sort of done with critical minerals and investment into Australia in the critical mineral sector. I expect you'll see that in uranium. Uranium itself is not classed as a critical mineral in the US. It's an energy fuel. But in Australia, we are actually talking, and the Minerals Council just put in a submission to include uranium into the critical minerals list.
Thank you, Murray. I'm going to hand over to you now. So given the notable rise in uranium prices and some of the best monthly results for uranium mining stocks we've seen in the last sort of 2 years, how do you feel that the financial sector is reacting to these developments, and what sort of investment trends surrounding uranium and nuclear energy?
Yeah, thanks, Jane. Very positive. 2 years ago, I was ringing brokers that didn't want to take my call. In the last 3 weeks, they're all ringing me, including Guy. Aren't you, Guy? Yeah. So look, there's been an influx of calls because investors are realising that all the things that Guy's talked about, the math and supply demand issues, are causing creating an environment which is going to be fantastic for investment. So we're just getting a lot of calls coming in. Been taking and doing presentations on a regular basis because people are very much interested in uranium now.
Guy, do you have anything you want to add to that, given you're being thrown under the bus?
Yeah, look, I mean, it's been a good start to a sector recapitalisation, right? I mean, you've got to remember this sector is responsible for producing raw material that produces 10% of the world's electricity, and carries a massive burden of decarbonising that electricity. Yet the global market capitalisation fits inside Fortescue. So it's a tiny sector doing a big job with a bigger job to come. So as I said, it's a great start. We're still not on a number of stocks, still not anywhere near the September 21 highs that were put in place. So it's only just begun. I mean, obviously past performance and everything else, but just the sentiment shift, as I keep saying, it's governments driving this and expecting supply will find its way to the market.
Guys, next question I'm going to actually open up to the panel as a whole. Pete, I might go to you first, but so how do you foresee the global sentiment towards nuclear energy affecting the pace at which these scenarios might unfold, especially with regards to achieving that net zero carbon emissions target?
Yeah, Jane, thanks. Look, I think we've sort of covered that already, but with regards to with regards to this unfolding, as I said, the political drive to position nuclear to assist with reaching those targets is forefront and paramount to this. And we can only see that pace, or I can only see, I should say, that pace being more embraced and being moved forward. I mean, we're all bullish, we're all excited about the sector at the moment. And that continuing narrative, as Guy mentioned, about all of the, or almost all of the current nuclear countries have committed to continuing their nuclear fleets. Again, that sentiment is being pushed and being kept forward. So only increasing as we strive towards meeting our carbon objectives would be my commentary on that, Jane.
Anybody else have anything to add there?
Yeah, Jane, I mean, I think it's interesting to see what's happening in Australia. Now, Australia, even if we build reactors, we won't materially impact the uranium supply globally. But the need to move the Australian collective psyche away from Rainbow Warrior and Chernobyl to net zero, net zero nuclear is something that it's just blasted onto the scene in the last 12 months. And that's reflective of similar changes in Canada and Europe. In Europe, the Greens now agree that nuclear's green, and Canadian Greens now think nuclear's green. Unfortunately, our Greens have got a bit of a way to go. But I think this is unfortunately where Australia is a bit behind the rest of the world. But thankfully, the discussion is here, and forums like this are fantastic because who would have thought the uranium sector could pull a few hundred investors on a call only 12 months ago. A lot of excitement.
Murray, anything from you or?
No, Jane, I'm in the interest of time. I want to have my 10 minutes of presentation about uranium.
Okay, wonderful. Guy, I'm going to hand back to you for this one. So the World Nuclear Association estimates a doubling of uranium demand by 2040, which we also saw in your presentation, with small modular reactors contributing to this increase by 2030. So how are different stakeholders preparing to meet this demand, especially in the context of long-term uranium contracting?
The simple answer is most of them are still relatively asleep at the wheel. There has been an increase in utility contracting, and year to date we're back to levels that we were seeing pre-Fukushima. But we're still not anywhere near replacement rate contracting. So, the utilities are engaging in contracts at a level that's less than what they're consuming every year. The only stakeholder I think that's ahead of the game at the moment is China. And they were late to the cycle last time, and they were responsible for that post-GFC rally again in the prices. We've seen a lot of press about Kazatomprom putting up their 2025 guidance back to their subsoil use agreements. The market says, oh my God, here's all that supply. What they're failing to recognize is that the lion's share of that is going straight to China. And that's one thing the WNA don't model. They model what reactors are you building, do you have, you're planning to build, and maybe in the pipeline. China's not thinking that way. They're thinking we're going to 300 gigawatts, so that's going to require 150 million pounds of uranium per year. We'll take it all now, and we're thinking way ahead of that. But as I said, it is reassuring to see that the utilities are coming back. We keep hearing that there's more interest coming into the end of this year, but they've got a lot of work to do. And it was very brave of the WNA to finally have a stab at putting the small modular reactor demand into their equations. And I suspect it will probably be like 2016, 15, 16, when we're all trying to model lithium demand. They're going to be wrong because they'll be too low. Because I think what we're going to find is that small modular reactors are coming, regardless of what naysayers are talking about. Yes, there's a generation 4+ that needs to go through more regulatory hoops, but the first wave is existing technology, and that will be rolled out very quickly. So they've got a lot of work to do, and as I said, these cycles are multi-year cycles. Utilities don't move fast, but once they decide they need to contract, it takes them multiple years to put those into place.
We'll guide just further to that then. So the extension of operating life for existing reactors has been seen as a positive move. However, obviously, of course, there's potential challenges tied to aging infrastructure. So what measures, in your opinion, do you think should be taken to ensure the continued safe operation of these aging reactors? And how can the lessons learned be applied to newer advanced reactor designs?
Yeah, look, I mean, with respect to reactors, when they started being built in the 50s, 60s, 70s, nobody knew how long they would last. So some bright spark said, why don't we put 40 years on it? And that seemed to be something that was globally taken up. What the important thing to remember is that whilst the concrete and everything else, the structure of the reactor is the biggest cost and has proven to be robust. And we already have reactors that have been 60 years and some looking for 80 years. And there is very good engineering advice. And remember, they're not looking at this lightly. It's a nuclear reactor, so there's a lot of scrutiny as to how long they could last 100. But we're not looking at 40 or 50-year reactors. They don't have the same components that they had when they were built. Every year when there's maintenance, there's big refurb programs. So it's not looking back at like a Star Trek episode where there's levers and steam. It's state-of-the-art technology running these reactors now. So that's one thing to consider, and I think that gets a little bit lost. People sort of think back to Simpson-esque type things, saying, "Oh my God, we've got this creaky old thing that's running." Sure, in coal-fired power plants that might be the case, but nuclear, and so. And going forward, there's been a huge amount of safety redundancies, and the small modular reactors have taken the learnings of 60 years of gigawatt scale and put that in. So I mean, and again, as I said, there's been 3 high-profile incidents over that time, and the sector has learned from that and has probably, got some of the highest safety standards in the world.
Thanks, Guy. My next question, Murray, I might go to you for this one. So the primary production of uranium continues to be the major source for nuclear fuel, with secondary supplies projected to diminish over time. So how can the nuclear industry ensure that reliable and diversified supply of nuclear fuel? And are there any innovative strategies or technologies on the horizon to address potential supply constraints?
Interesting question, Jane. Really, whether the nuclear industry needs to do it, but the industry is going to need higher uranium prices, as Guy said. So you would need incentivization to get us into production. And the world has got, a defined resource for finite resources now, but of course we're exploring and finding. And if you refer to us, Elevate, 4 discoveries in the last 4 years. But what we need to do is we need to be innovative in our approach to mining, lower the cost structure, to be able to mine lower grade materials that we have been able to mine in the past. And that's where Elevate comes in again. This is a bit of a plug. I'm really enjoying this. We've developed this upgrade process which lowers the cost base for superficial style ores that we see in the Namibian desert as behind me. So I think the supply demand has got to push the price up, the uranium underlying commodity price, uranium price up. And then we need to be innovative as an industry to be able to develop projects that either have got metallurgical problems, mining problems. Geopolitical is a little bit more complex, but the innovative nature of mining and processing, I think, is what we need to do, and that's what we're at the forefront of.
Any other comments from the panel on that?
I might just add a couple of things there, Jane. Specifically looking at the Athabasca Basin, which is relevant to Basin energy here, There's a couple of technologies or mining methods which are being deployed, which are a little bit out of the ordinary. So we think of the Athabasca Basin, we think of large underground operations. Elsewhere in the world, we think of open pit. We look at ISR opportunities, which have traditionally been hosting these sandstone, quite porous, flat-lying deposits. It's great to note that Denison Mines have recently successfully trialled ISR mining methods in the Athabasca Basin as a different method of extraction for a lower cost technique in this different part of the world. So innovation of different techniques and technologies in the basin are being seen. And the other worthwhile comment is that the Athabasca is host to some of the largest and highest grade deposits, but also there's some of the smaller deposits, also high grade, very valuable, with their own mining challenges. The work that Orano are doing with Sabre is also pretty innovative. So this is using a hydraulic downhole drilling method, which mines the ore using high water pressure and then pumps it back out using a high pressured air. So ideal for these compact, low footprint mines, which traditional methods would probably struggle to get off the ground, but again, opens up these new opportunities of potentially significant uranium supplies up in the Athabasca and potentially elsewhere in the world. So, good innovations.
Wonderful. Look, I think just to wrap things up, we're running slightly over, but so in light of the projected long-term increased demand and potential uranium supply crunch, what strategies are being put in place to support a sustained bull market in uranium? Jono, I might hand over to you first out.
Yeah, sure, Jane. Look, I think the guys have mentioned it twice or three times as incentive pricing. So, you know, there needs to be a huge amount more uranium coming to the market, and at low prices, it doesn't work, and the demand won't come. So the downside of not having the uranium and not having reactors online, well, that's not an option. So the only option is for pricing to meet the requirements to get new demand into the market. So while there will be ups and downs, and actually also having some pretty big players exit the spot market, which reduces liquidity in spot and can make things a lot more volatile, there's really no other trend but up with volatility. But it's got to go up.
Wonderful. Guy, do you have anything on that as well?
Oh, look, I mean, I think the one thing we have to remember when we talk about bull market is, you know, for coal and natural gas, the price of coal and natural gas, is 80 to 95% of the cost of generating that electricity. For a nuclear power plant, when you look at that cost, the uranium itself is sub 10%. And when you then throw in the fuel cycle, it's, with fuel cycle prices here, it's maybe closer to 20%. So you turn around, you say, $20, $40, $80, $150. Is it making nuclear power plants uncommercial? And the answer is, they don't want to be paying more, but they can continue to pay more, and they had in the last cycle. When you then throw in the idea of carbon-free baseload electricity, you then look at the difference in what it can provide to the grid, and in replacing coal from the grid. I turn around again and say this bull market will continue for as long as the nuclear power plants continue to play a key role. So that constraint that people often turn to, well, it's going to get to a price where nuclear is not competitive. That's not an issue. So a little bit slightly different way of answering that question, but just important to remember that it's not that relevant to the provision of nuclear electricity.
Wonderful. Anything from you, Murray, or?
No, Jane, I'm ready to go.
Okay. Well, gentlemen, thank you for joining me for the panel discussion. Guy, great presentation. I'd also like to note that Guy Keller will be hosting a uranium-focused conference at the Adelaide Convention Centre on the 15th and 16th of November.
Yes, Global Uranium Conference. Yep. So, and I think the website is globaluraniumconference.com. Second year we're running it this year with the support of the Mineral Council of Australia. So it's going to be an even bigger event than last year, with basically every ASX listed uranium opportunity will be there, as well as a bunch of key offshore people as well. So it's looking to be a really good time to host a conference like that.
Wonderful. If you do have any further questions for Guy or for the panel, please reach out via the contact details on the bottom of the ASX releases, or alternatively to info@janemorganmanagement.com.au. But Guy, thanks for joining us. We might jump into the presentations. Okay, so first up, we have a presentation from Elevate Uranium with the ticker code EL8. Elevate has significant resources in Namibia and Australia, and is making new discoveries through active exploration campaigns. Murray, I'll hand over to you.
Thanks, Jane, and that was very insightful to listen to Guy in particular, and a few of our comments as well. Elevate Uranium is a geographically diverse uranium company, 2 jurisdictions, Namibia and Australia. We've got 115 million pounds of global resources in both of those countries. We've got an extensive and now diverse pipeline of projects coming on stream, and we've got our patented upgrade process, which I alluded to in innovations discussion, which markedly reduces capital and operating costs for superficial styles of ores. We're aggressively drilling in Namibia on the Copies project. We've got 4 discoveries in the last 4 years. We've got a small but dedicated and experienced team running this project, running these in this company. And as you've said to me, Jane, what better time to be in the uranium industry? And from a corporate point of view, for an ASX listed company, we've got a small number of shares on issue, 278 million. I like to refer to the debt. There's 0 debt in our company. As of the end of June, we had $10.1 million in the bank, which is a great position to be in. We're burning about $700,000 a month on our exploration program. We think we're undervalued, like every other ASX's company, anybody that presents, relative to the uranium spot price. Our share price hasn't moved with it, although of late it has a bit. And our shareholders distributed quite evenly, and the 2 ETFs, some of the two of our highest shareholders. So Namibia is the first place we're focused on. Why are we here? We're here because it's a uranium mining jurisdiction. Rossing have been operating in country since 1976, so 47 years of continuous operating in the country. Very supportive government. And what we're looking for paleo channels where uranium's leached or weathered out of the granites over millions of years and flowed down through old river systems, which are now called paleo channels. They've all covered over, difficult to find. We use electromagnetics to locate them. But most of these are in, these old paleo channels, generally less than 25 metres deep. So we're not talking, 200, 300, 400 metres deep like a lot of people are in other parts of the world. These are really shallow deposits, which are, right next to surface. So we're the largest tenement holder for nuclear fuels in Namibia. We're actively exploring, as I said, 4 recent discoveries. The Namib area is where we focused a lot of our attention at the moment, and particularly the Copies project. We focused our attention here and built up this contiguous land position because we have 270 million pound of resources downstream of where we are. So just moving upstream from those on the thesis that I talked about before of uranium flowing through these old paleo channels and flowing into these other deposits. So Copies is the project that we've got 3 drill rigs working on now. We discovered this project in July of 2019. Within the first 3 years of tenure, we estimated a resource of 20 million pound. That's unprecedented in the country. No one's done it that quickly before. And what we also realised that we've got mineralisation over 20 kilometres along this tenement and the next tenement. So those 3 drill rigs we've got are working Monday to Friday. They're drilling 5 holes per day each. Each hole is 25 metres deep. Each hole is RC and costs us $1,000 to drill. So we're drilling 75 holes a week with 3 drill rigs. That's a lot of holes, and I don't think you'll hear too many people say that to you in any presentations, Jane. But over this 20-kilometre strike length, there's a lot of holes to drill. So what we're expecting out of this is we've got a resource update around the Copies 3 area in the end of this month, and then another one around Copies 2 South and Copies 4 in the coming quarter, next Q1 next year. So there's a lot of news flow coming out of it, but we're also got a lot of exploration to do in Namibia. As the largest tenement holder, we've got more and more drilling to do and exploration, and hopefully our success will continue. In Australia, we've got assets in the Northern Territory and Western Australia. The focus has been on the Northern Territory. Unfortunately, when we acquired these assets, it was just before the world went into lockdown and we were unable to move too far. So it's only just recently we've been able to get out on the ground. We've done some geochem work and we've done some seismic work at Angela and Minerva. We want to follow up the Angela seismic work. We believe there's a potential for another lens underneath the current mineralised lens, so we're going to go and drill that. And also the Minerva deposit was discovered in 1978 with vertical drill holes. No one's drilled on it since. There's 10 holes with grades in excess of 10,000 ppm, so very high grades for Australia. We need to follow that up. So we've got a bit of work to do on the Australian assets as well as the Namibian assets. But one of the things I alluded to in my discussion, in my questions, was innovation. And one thing we have been is innovative, not just in the way we explore, but now in the way that we've developed this process called upgrade. It's a process whereby we've looked at all the minerals present in these official laws in Namibia, and we've determined that the best way to concentrate the uranium is by rejecting the gangue minerals, as opposed to, if you focus on uranium only, you don't get a very good result. Whereas if you just reject gangue minerals that cause you the problems on the way through, it's reverse concentration. So it's using commonly used unit operations to find a gold, a base metal, a mineral sands plant, but then you figure them in an unconventional manner, which makes it innovative and patentable. So we have 3 patents around the world on this process. So what it does, rejecting gangue minerals all the way through, we end up with a less than 5% of the mass that goes to the leach circuit. So as you can imagine, you're rejecting mass all the way through. Your unit operations are getting smaller and smaller. Hence, your capital cost is dropping. Your OPEX is dropping. So, we believe that from the work we've done to date, that we can reduce the CapEx by 50% compared to conventional processing, and the OPEX by 50% compared to conventional processing. So that's a significant reduction. And what it means is we can develop projects that others can't, right? And that's that innovative aspect we talked about. So, and the less than 5% of the mass of concentrate gives us optionality. We could leach in a very small leach circuit, by the way, and refine to produce yellowcake. Or alternatively, we can take our concentrate to a third party. They could leach it and refine it for us. Or alternatively, we have a project like Safe Copies that's got a large resource in it that could have a refinery on it. We could bring concentrate in from Heribeb or Nami 4 or other projects we've got. So it really brings our projects closer together. And the other innovative aspect of this is it produces a calcite concentrate that could be used to neutralise acid leaching tailings. So there's a huge number of environmental benefits, which I won't go into now. And the other innovative nature of what we're doing is we're looking at using a surface miner to mine the ore. So it's cutting at half a metre in depth. It runs out, it comes out the back of the machine, drops onto a truck and goes straight into our process. It avoids drill and blast. It avoids crushing in the processing plant. So another significant amount of benefits, which lowers the cost base. So really significant impact of us and was a catalyst for us to grow the company. And that innovative aspect we talked about is so important in going forward. So just in summary, I know how little time you've given me, Jane. So we're in geographically diverse, in 2 good mining jurisdictions, and Namibia is fantastic with having uranium mining for 47 years. That's 2 generations of Namibians that are familiar with uranium mining. They're not scared by it, very, very comfortable with it. 115 million pound of global resources and growing. Expect that to grow this month and then Q1 next year, and then following through drilling next year. And then we've got that pipeline we talked about. I haven't been able to talk about them all, Jane. We've got so many to talk about. But with 4 discoveries in Namibia in the last 4 years, add to the Marinika project over there, which has got 61 million pound. We've got a pipeline of projects coming on. Our upgrade process is very disruptive and innovative and extremely value additive for us. Drilling aggressively now, and 75 holes a week from 3 drill rigs is something you wouldn't hear in the uranium industry, and you don't hear in the uranium industry. And a team that are very experienced in uranium, been around for a long time. I've been at the helm of this company for over 11 years. So I've ridden the lows and the $18 a pound that Guy talked about. That's when we were counter-cyclical and building our asset base back then. And what a great time to be in uranium. We've heard everybody talk about it this morning or today, or wherever you are listening. The supply demand is compelling. So we're expecting that uranium price is going to continue to move north and incentivize new production. And I finish on the desert in Namibia. That's where we are. The background of the image I am is the Copies project. It's not difficult to explore in this environment. So thanks very much for your time, Jane, and thanks for the people that are listening.
Thank you for that, Murray. So as we know, Namibia is obviously a very important jurisdiction for uranium, given the several big players in the country. Can you give us a little bit more information on the scale of the projects in Namibia and the location?
Well, Rossing, as I said, been there for 47 years, continuously operating. I think the longest continuously operating uranium mine in the world. That's in the order of, I think it's 14 million tonne per annum processing plant. Husab was developed 5-6 years ago, similar size, a nameplate of 15 million tonne per annum. They're both predominantly Chinese owned now, different Chinese companies. Rano's Tribeca project, they built a 38 million tonne per annum heap leach racetrack operation. The heap leach pads are 3 kilometres long, enormous, 15 kilometres of conveyors on it. So we're talking about large scale, lower grade. I mean, that's the thing. People talk about the grades of Athabasca, but the complexity of the Athabasca Basin is, a lot of weather for one thing. You can only drill for 6 months of the year. As you can see in the background, you can drill for 12 months of the year in Namibia. So the grades are lower in Namibia, but it's a bulk scale, bulk mining operation and shallow. So, when we're talking about less than 20 or 25 metres deep for a drill hole, we're pushing it deeper than it needs to be. So, yeah, there's some big players in Namibia, and there's certainly some great projects. It's the only country, in the world that has a dedicated uranium association. The Namibian Uranium Association are a conduit between explorers, developers, producers, and the public, the government, stakeholders. They come to the conference that Guy talked about in November. They come to the 2019 one and presented on the model that we use in Namibia. So a bit of a leader, really, in the uranium industry.
Murray, that kind of answers the next question just about the political stability in Namibia, especially given what's happened in Niger over the past few days, actually, in fact. But do you want to just reiterate the political stability in Namibia?
Yeah, look, it's very stable and a very supportive government. One thing we get a bit confused about is some people think Africa is a country. Africa is a huge continent with a large number of countries and quite a diverse. Niger, you can't compare to the Congo. You can't compare it to Namibia. Namibia is a fantastic place. I've taken my kids and wife there for a holiday, self-drive tour. Kids absolutely loved it. But yeah, very politically stable and also accessible government. We meet with the minister regularly, meet with the mining commissioner, have a very good relationship with the government, and just making sure they understand what we're doing and we understand what they want out of us as well.
Thanks, Murray. And just finally then, so shareholders, what can we look forward to over the next 3 to 6 months?
We can look forward to enormous growth in our resource at Copies. We've got drilling occurring there now through to the end of the year. Come next year, we'll start drilling we'll continue drilling at Copies, but we'll also take our drill rigs to other projects, other discoveries we've got. We're looking at, Australian assets and what we can do there. And by then, of course, as Guy talks about, uranium prices are probably going to be $100 a pound in 6 months' time, Jane. So we're all going to be smiling even bigger than we are now, and feeding off our success. So we're obviously like everyone else. We leverage the uranium price, but as one of the most active exploration companies on the ASX in the uranium industry, we're leveraged to all our activities. Increasing our resource base, our drilling success we've had to date, and we've got a history of success there with 4 discoveries in 4 years. So I think shareholders can expect a lot out of us in that period of time.
Wonderful. Well, Murray, thank you for joining us again today. And if we've missed any of your questions, please feel free to reach out via the contact details, which can be found on the bottom of the ASX releases. But Murray,
Thanks, thank you.
All right. So next up, we have Basin Energy with the ticker code BSN. Basin is a uranium exploration and development company with an interest in 3 highly prospective projects positioned in the southeast corner and margins of the world-renowned Athabasca Basin in Canada. To tell us more, I'm joined by Pete Moorhouse.
Yeah, thanks, Jane. Okay, so great to be presenting today. It's really nice to be presenting again alongside a couple of dedicated uranium companies as well, and we've all got our very different stories and value propositions to tell you about. Just to follow on from Murray, here to tell you about the fantastic operating environment of the Athabasca Basin and the almost 10 months of the year that we can drill over there. I'll tell you a little bit about Basin Energy. So unlike our peers, we are a pure play uranium explorer. We were established about 18 months ago, really with the mandate to identify credible uranium opportunities globally. We listed 12 months ago under ticker code BSN. We have a market cap around $10 million. We're fully funded for our next round of exploration, and that includes drilling scheduled for early next year on our Athabasca projects. Look, in the search for credible exploration assets for uranium, bearing in mind this was pre the current focus on the sector, there are some fundamentals that you need to be paramount in your due diligence. And this isn't just technical exploration merits. This isn't just talking about geology. It's talking about explorability. That includes depths, which Maury mentioned about he has in favour in Namibia, and talks about infrastructure and jurisdiction. And to know that you've got a transparent framework for your exploration program. So with that jurisdiction, it's so key to your exploration projects in uranium. And critically with that as well is if you find something, you've got a credible pathway to actually developing it. So that's what we've tried to form. That's what we've focused on. Basin identified and gained interest in 3 exploration assets in the Athabasca Basin itself. And now this is located in northern Canada. For those of you less familiar with it, it's been producing uranium for over 65 years. It's been a top 3 producer of uranium for 45 of those. And the industry really reflects that as well. It's consistently ranked in the top few for mining investment attractiveness in the Fraser Institute. So this is a mature part of the world for uranium mining. Basin's got a nice dedicated team. I'll tell you a little about that in a moment, and a clear systematic approach to our exploration. Here we've got a map of the Athabasca Basin. So the darker grey shows the outline of the basin itself. There's a big sandstone unit. Each of the green dots is a significant deposit or an existing mine. Now, the circles around those give you a feel for the scale, but Basin provides exposure to 3 assets located in the heartland of the mining district. Now, I really like to bring the opportunity of Athabasca back to a Australian-specific exposure. For me, I spent a lot of my time in Northern Australia looking for uranium, and we look at Jabiluka as the standout uranium deposit there. That's about 350 million pounds or so at about 0.4% uranium. The big one in the Athabasca is the McArthur River, 675 million pounds, but it's 17% uranium. Now, the scale of the deposits here, the grade of the deposits here, are why this part of the world has consistently provided uranium mines and been a consistent producer of uranium for so long. So Basin, located in the heartland of this mining district with 3 projects, North Millennium and Marshall, and the project I'll talk to you today is the Geeky project located in the southeast edge. Very quick geology lesson, because this is critical to why we're a little bit different to some of the traditional Athabasca plays. We've got our sandstone unit here, which forms the Athabasca Basin, a younger rock type and an older rock type sitting underneath it. And traditionally, the major deposits have been found at that contact, hosted in the sandstone or in the basement sitting directly underneath it. And the exploration model was very much to drill to that contact, drill just through it. If you don't hit the grave, move on. Now, the repercussions of that is there's been 65 years of mining. A lot of the targets are now getting very, very deep. So you're pushing down to 1,000 meters, 850,000 meters deep for a lot of the traditional exploration model targets there. In 2013-14, the guys at NextGen discovered the Arrow project. Now, they took a philosophy of looking for the right lithology, the right rock types, and the right structure, and then conducting exploration like we would do in Northern Australia, very similar. But we don't need to be at that contact. They discovered Arrow, which is now the basis of a $4 billion company. Why does that matter to us? Well, that matters to us because this opens up a huge area of ground which has previously been completely overlooked, and that sits on the outskirts of the basin itself, where you have those same key criteria: lithology, structure, and explorability, because this is within the top couple of 100 meters. And that's what we are currently exploring in our Geeky project. Where do you explore for when you're looking for uranium? You explore in places which continue to provide significant shareholder returns and exploration success. So we've got a timeline here from 1973 to current day, and each of these U's are significant deposits. Now, I do accept that MacArthur River skews this because it looks absolutely massive, but each one of these are company-making assets. What I like to draw attention to is post-Fukushima. To me, significant shareholder returns from the uranium space have really come in the Athabasca Basin post-Fukushima, and not a huge amount of other places around the world. We look at Arrow, which was NextGen's discovery. They were an exploration company with $30 million market cap. They're currently a $4 billion company off the back of exploration success. If you get it right, your shareholder return is phenomenal. And more recently, the work at ISO Energy, the Hurricane deposit, again, phenomenal shareholder returns. And the fantastic work that 92E and the team are doing on the eastern side of the basin, continued success even in a very downturn, neglected uranium exploration space. So that's why you're in the Athabasca Basin. I'll run you through our Geeky project, which has been the focus of the company to date. So this is looking for what we call basement hosted mineralization, shallow, high-grade opportunities. We're using that Arrow type model, using that NextGen type model. You're looking for the right rock types, you're looking for the right structures, and then you're doing sensible exploration. So Basin to date has done a series of geophysical surveys. We've mapped what we think is the right rock types, and now we've locked into what we believe are the right structures. We've just completed our first drill program. We did 8 holes across 3 prospects. So the Arrow Lake prospect, we did a single hole and we got our highest grade hit, half a metre at about 0.3%, just shy of 0.3% uranium. We got our Hourglass Lake project where we drilled 2 holes, and our Preston Creek area where we drilled 5. Now, these are significant results. These are significant results because each of these drill holes hit phenomenal amounts of structure, phenomenal amounts of alteration. So if you think back to those key criteria as what we're exploring for, we're looking for a system which has got the right lithotypes and the right structures. The guys doing the technical work have now pinpointed 2 structures which show the scale. They show these 30+ meters of brecciation, of alteration, and they've also got the evidence that there is uranium in these fluids which are causing this system as well. So whilst we're not claiming these are all grade, we're claiming that these structures are the right ones to be chasing. Pretty excited about this, and certainly there's a lot more exploration work to be doing and a very targeted approach for follow-up. Now, we certainly could have kept going, but we did look at what our neighbours have been doing in the area. And one of the things that has worked successfully is when you do have a handle on those structures that are the prospective ones, airborne gravity has been used to map the potential areas of interest. Now, this picks up alteration. What I like to draw people's attention to is on the bottom right of my diagram here, we've got the footprints to scale of these big deposits. So this is a big project area. This is 330 square K of land. So what we decided the best use of our money was to go and do airborne gravity to map these potential alteration systems and then set up for a drill program, which we're working towards now for our winter program. Results for the gravity are due in the next week or 2. So we're expecting them literally any day, today or tomorrow, from the contractor. We'll pull those apart. We've already started planning our follow-up drill program. And in summary, 4 of our 8 holes drilled anomalous uranium, which is a pretty good success rate for a first ever greenfields exploration play. We got a little bit of grade. We've got some significant pathfinders, elevated leads, elevated trace metals. We've got scale, 30+ meters of alteration and structure, and we've got the right address. So that's the crux of the company for the next 6 months. We'll be focused on moving hold to Geikie. We also have interests in 2 other projects which we'll be pushing in North Millennium and Marshall, and we can look at the presentations for updates on that. The company is led by me, so I'm Managing Director, uranium exploration geologist by background. Our chair is Blake Steele. So Blake is a corporate background, very strong in the uranium space, was formerly the CEO of Azaga, and now Azaga built up an ISR-focused company in North America. Accumulated a series of assets and was sold to Encore Energy at the start of last year for $200 million. And our technical program is led by Odile Meffray. So Odile was formerly Orano's project lead, formerly based out of Saskatoon, running the Athabasca Basin program. So brings to us a specific Athabasca skill set. Very uranium specific, very direct set of skills, and well positioned to make the most of this sector as we move forward over the next few years. I'll pass back to you, Jane.
Wonderful. Thank you for that, Pete. I'll get you to stop sharing your screen and jump into some questions.
Sure.
So as you mentioned earlier on the webinar, it's likely that Russian uranium will be sanctioned. So it's pretty obvious, but how does this position Basin and the Athabasca Basin in general for future uranium supply into North America?
Yeah, absolutely. This goes back to my commentary in the talk there, that jurisdiction's key, and there's a real focus in North America for energy security, for establishing a relatively self-sufficient energy supply. We see Canada pushing its nuclear deployment, but we also see a strong relationship with America in general, using Athabasca uranium to supply the industry there. So Basin is very specific about its jurisdictions. We see that North American space as being a fantastic one to be operating in, and we'll continue to focus on Canada and North America for our opportunities.
Thanks, Pete. And I know it's probably a little bit premature for this one, but with the results of the airborne coming out, but what's the follow-up drill program at Geikie looking like?
It's not premature. The reason being is there's a series of targets that need drilling, and they need drilling very quickly. There is no shortage of places to put a drill rig, but as you'll appreciate with any junior, optimizing your exploration spend is critical. And that's why we've chosen to do this gravity. So we're well funded to do a 3,000 meter-ish drill program kicking off in January, February next year, and we're actively in place putting the wheels in motion for that. That will be the key focus for the company. We're also setting up groundwork to advance the other two projects, North Uranium and Marshall, and we'll update the market on that over the coming weeks.
Thank you, Pete. I'm jumping around a little bit here, but are there any subsidies or grants available for uranium explorers and developers in Canada as North America continues to seek security of critical commodities?
So in Canada and Saskatchewan, there's a series of local government incentives. We are pursuing those actively. There are the opportunities for various funding incentives, but we're not advanced with those at the moment. So I'll leave that one there for now, Jane.
Wonderful. And then just finally, you discussed this as well, but what should shareholders be keeping an eye out for the next 3 to 6 months?
Keep an eye out for the uranium sector being a fantastic place. What a time to be in the uranium space, as to quote a veteran of the industry. Basin will be continuing our exploration in the Athabasca. We've got the information coming out from the gravity survey over the coming weeks. We've got planning for the drill program, further work on North American Marshall as we continue to really push our North American approach for sensible uranium exploration in good jurisdictions.
Wonderful. Well, Pete, thanks again for the update and for joining us on the panel today. As I mentioned, a copy of today's recording will be available online in the coming days. And if we've missed any of your questions, please feel free to reach out by the contact details on our ASX releases. But thanks again.
Thanks, Jane.
Next up, we have a presentation from Cauldron Energy with the ticker code CXU, an exploration and development company focused on identifying and exploring for minerals critical to a cleaner planet. Cauldron has a diversified portfolio of projects in Australia and has already achieved exploration success with its Yanri uranium project in WA.
Thanks, Jane, and thanks to everyone for joining. And reiterate what a time to be in uranium. My previous experience in nuclear goes back 10, 15 years in the UK, and since then, there's been a lot of bad time in the industry with low prices, but geez, what a time to be. Cauldron, everyone will know, hopefully a lot of people know, we are a turnaround story. We've been around a while, but the new management team has been in around 9 months. And over that 9 months has been a complete refresh of the business. You can see some jazzy new branding here that Jane helped us with. We've also bought another project, strengthened our team, and are pushing forward with our exploration plans. I will quickly just highlight a couple of points here. And in this preso, I've actually I've just gone through and taken out a lot of the industry stuff that we've all spent so long talking about. So the key things to note on this page, we've seen a big improvement in the share price, but more importantly, a really huge increase in our volume traded. That's been really, really exciting for us. That is off the back of increased interest in the sector, but also it's because people are understanding that, we've had some time out in the wilderness. We were sort of forgotten. Our price and market cap traded down to a very low level. And they're now understanding actually, well, that's probably not fundamentally right. And the new team is giving it a real good go at sort of turning the market around. The new chairman, Ian Mulholland, one of the few guys who has won Explorer of the Year twice. So Ian has a rich history of finding stuff and developing it. My background, all sorts of different things, but including nuclear and radioactive waste. So I financed and built and approved Australia's first radioactive waste repository. It's a topic close to my heart, and that is in WA. And I did that while uranium mining was banned in WA, and that's quite interesting. And our exploration manager, Angelo, he also joined us relatively recently. We do have some non-uranium assets. I'm not really going to talk about them today. We're focusing on our Yanri asset that is in WA, and there's the double-edged sword. It's a big paleo-channel in situ recovery asset, but it's in WA. And so the value has traded off in line with the WA policy, but there's a lot of momentum around coming to change that policy in WA. Quick plug for the Uranium Conference. We have talked about this. So I sit on the Uranium Forum for the Minerals Council, and so helping convene the conference. I'll be there chairing a session or two with Guy down in Adelaide. So encourage you all to come along. It's going to be good. I have been focusing on getting the story out there around the WA policy and federally. The discussion is unfortunately politicised with Mr. Dutton, but the discussion around the possibility of nuclear in Australia. Now, we don't need Australian reactors to sell Australian uranium, but it probably helps. And so, we're taking a broad approach to be absolutely, front and centre of the discussion. There's a few little examples here of some of the work that we've done and articles that I've authored, and it's very interesting to see that the mainstream of the community now is interested in nuclear and uranium mining. So, as part of the Uranium Forum, we have released polling which shows that the majority of people in WA want that policy changed. And what's really interesting is obviously the majority of Liberal voters, but it's a majority of Labor voters as well. And it's 34% of Greens voters and like 80% of Pauline Hanson One Nation voters. But there's a very, very strong support for getting the policy changed in WA. And actually that shouldn't surprise people because WA is a mining state. And so we're doing a lot of work talking with people. The clearest change point is a change in government. The next election is in March 25. So if the Liberals are in, the policy changes. It's important to note it's a policy, not a legislative change. So you can do it without needing to control the upper house. It's literally the red pen of the mining minister, very quick. But with the developing situation with AUKUS in Australia and federal nuclear subs to be home ported in Perth, there is also an opportunity to bring that uranium state policy in line with AUKUS. So it is not dependent on a change of government. Would be easier. There is a pathway to changing that policy, even through an existing Labor government. So that gets us on to Yanri. Yanri is one of the largest uranium deposits in WA. Technically, it's quite similar to the Honeymoon project in South Australia that Duncan and Boss are doing so well at developing. And for us, it's fantastic to see them do so well because it proves that you can do this stuff safely. And therefore, one of the main arguments that the anti-uranium brigade bring out, well, Boss just kind of disproves it. So we're very keen to see them continue. Our asset is also in situ recovery, lower capex, lower opex, more environmentally friendly, don't move dirt. So not all assets obviously in WA are ISR, ours is one of them. And so that means that once that policy changes, we can kick through and move through to the feasibility study very quickly. We are currently doing a scoping study on our asset. And, one of the hashtag first world problems is, well, what price deck do we put in it? As an ISR asset, you've got lower capex, lower opex, you'll make more money than others. And Boss, I think pressed the button on FID at about $30, $35 uranium, you know, you're now thinking you put 60, 70 in there. You know, these assets are going to be very profitable. And it's a matter of time. The policy will change in WA. And when it does, we are the most levered to the upside. Whereas, and I know Guy made a bit of a comment about not quoting too many pounds and how cheap you are, but we've got a very large resource base and we're capped at about 20 cents per pound in ground. It's extremely, extremely cheap. And so the leverage to the upside is multiples there. Now, what we're doing, we can't mine uranium in WA. We can still explore, and we have a program that works approved by DMERS at Yanri. We've just done a cap raise, and some of those funds will be going into exploration program with the aim of further increasing our uranium resource. Just quickly, we've done a renounceable rights issue to raise 1.6 million bucks. Renounceable structure, a little bit more paperwork for me, fairest way for the shareholders. And I was very, very, very keen to make sure we looked after, to the extent we could, all the shareholders that had come into the company over the last couple of months, because the volume has been extraordinary. And so our rights timetable is ticking over and has been really, really well received. And that provides us the funds we need to go drill Yanri. And I haven't talked much about it. We are also drilling a nickel asset in the West Yilgarn, chasing chalice-style Julimar mineralisation. We've just returned results of an EM survey on that, and that will actually be our first drill campaign. And then Yanri will come thereafter. The other thing to note, obviously, the scoping study for Yanri is underway, and it shouldn't actually be long. It's very well advanced. Value propositions. Look, we are getting recognised for our new team, a new approach, new asset base. Most of the interest is in uranium. We do have a nickel asset, but 95% of interest is in uranium, and we're working hard to push forward with that drill campaign. And we're also looking for some more uranium land, but I won't go too much into that today. I think that's it, Jane. Short and sweet.
Wonderful. Well, thanks for that, Jono. I'll get you to stop sharing and we'll jump into a couple of questions.
Yeah.
So obviously you talked about the upcoming program of work. Do you want to just elaborate on what that is going to sort of look like?
Yeah. So the program of works was approved by DMERS without actually having put in drill holes. So we've got a flexibility to drill basically anywhere on the tenement that we want to. We have a very well understood payload channel there, and some, you know, it's not greenfields exploration, right? So it's low risk exploration to increase the resource, and you know, we're hoping to quite meaningfully increase that resource and also maybe hit some grade as well.
Thanks, Jono. And it's almost inevitable that Australia is going to be replacing coal with nuclear power. What do you think that sort of timeline is looking like?
So it's interesting. Look, I have been down in Canberra helping form some of that nuclear policy for the Libs. I think what you will see, by the way, is there's maybe a pivot where the first parts of as the Libs were forming their strategy and their policy, they talked a lot about SMRs. You will see a pivot which says actually anything that is Gen 4, you know, any existing, you know, good technology, including large footprint nuclear, could play a role in Australia. And that is important because I think there are some areas where big footprint nuclear does make sense and others where SMRs make sense. I mean, I think, you know, on Q&A the other day, you had Mr. Bowen, you know, do a Bowen special and say it's going to cost $387 billion to replace that. I mean, that was absolutely primary school maths that he used, the literally worst capex per megawatt capacity you could ever do, and simply times it 21.3 gigawatts of coal divided by 300 megawatts per SMR and came up with 71, and he did that. Absolute joke, and I'd encourage people to look at some of the commentary being put forward on comparable nuclear costs, because it's difficult to do an apples for apples comparison, but there's a reason it works around the world, and it can work here too.
Finally, so just to reiterate, what should shareholders and investors look forward to for the next 3 to 6
months? Yeah, so our first drill campaign will be in Melrose on our nickel asset, and that'll be kicking off once the crops are finished. It's not a good season actually there for the farmers this year, which means we'll probably be able to get access a little sooner than we would otherwise expect. So that'll be towards the end of this calendar year, and then next calendar year is when we'll be drilling Yanri, and we should have that scoping study out. I'd say the scoping study for Yanri is going to be out before Christmas. Touch wood. Don't hold me to that, but I hope so.
Wonderful. As I mentioned, a copy of recording will be available online in the coming days. Wonderful. Well, guys, thank you again for joining us. That is all we have time for today. As I mentioned, today's recording will be available on YouTube, the attending company's websites, and also on social media in the coming days. If you do have any questions for the panel, please feel free to reach out again. But otherwise, I want to thank you all for your time.
Thank you, Jane.
Thanks for organising, Jane.
Yeah, thanks, Jane.